Hello friends, today I am going to discuss one topic from Companies Act with respect to books of account to be kept by the company as per Companies Act 2030. We use a few terms with relation to books of account. First one is books of account itself, then there's a term called books and records, and then financial statements are there. So let us go through them one by one. Books and records, or rather I should say books and paper. Books and paper is as defined under section 2 subsection 12 of Companies Act, which states that books and paper includes books of account and any deeds, voucher, written document, minutes and register, whether kept in a physical form or electronic form. So this will be considered as the books and paper. Now coming to books of accounts, books of account, which is a subset of books and papers, it basically includes records for sum of money received and expended by the company, matter with respect to which receipts and expenditure has been incurred by the company, matter with respect to assets and liability of the company, matter with respect to costs records which has been prescribed under section 148 of the Companies Act, and sale of purchase of goods and services. Now coming to financial statement. What is the financial statement? Financial statement is basically consists of balance sheet, profit and loss account, or income and expenditure account, statement of changes in equities, cash flow statement, and any explanatory statement which is required or which is annexed as a part of above documents will be considered as the financial statement. This is defined as per section 2 subsection 40 of Companies Act. Along with the financial statement, we also take the concept of financial year. So financial year is a year which ends on 31st March of every year. However, in case of a newly incorporated company, which is incorporated after 1st January of any year, the financial year will be 31st March of the next year, not the immediate coming 31st March, but the next 31st March, that will be considered the financial year. Now coming to requirement of keeping books of account, section 128 is there, which talks about every company needs to prepare and keep at its registered office books of account and other document including financial statement for every financial year. Books of account should give a true and fair view of the state of affair of the company, and they need to be maintained on accrual basis using a double entry system of accounting. Books of account should be kept at the registered office of the company. However, they may be kept at certain other place with the approval of board of directors. But after such approval, we need to file the intimation with the ROC within 7 days of such decision. And in case books of accounts are maintained at a branch office which is outside India, it would be sufficient compliance if periodic summaries of those books of account are received at the head office at regular interval. Now coming to preservation of books of account, the books of account needs to be preserved for a period of 8 financial years immediately preceding the financial year, current financial year. However, in case the company is in existence for less than 8 years, then for all the year you need to preserve the books of accounts. Further, in case certain investigation has been ordered by central government under chapter 14 of Companies Act, which is investigation, inquiry and inspection, in that case central government may direct the company to keep the books of account for a longer duration. Now, who all are the person authorized or responsible for taking care of provision of this section? It's managing director, whole-time director who is in charge of finance matters, CF of the company, or any other person specifically authorized to take care of these matters. Now, in case there is a non-compliance by the company or any other officer who is in charge of these matters, a financial penalty is applicable in this case, which ranges from 50,000 to 5 lakh. Now, coming to section 129A, which talks about periodic financial results, the central government may require certain class of unlisted private company to prepare their financial statements on periodic basis, obtain board of directors review, get the accounts audited either completely or by way of method of limited review, and then file the statements with the ROC within 30 days of completion of that activity period. Then now moving to section 130, which talks about revision or reopening of accounts on the order of court or tribunal. Suppose there is one application is being made by income tax authority, SEBI, any regulator, or central government for that matter, or any other person concerned, that earlier the accounts of the company were maintained in a fraudulent manner and they are not giving true and fair view, and affair of the company are mismanaged and financial statement because of these reasons cannot be relied upon. They may apply to the court and tribunal to get the accounts of the company reopened and recasted. So maximum period of reopening or recasted is 8 years for financial year immediately preceding the current financial. However, in case some investigation is being ordered or is in progress as per chapter 14 of the Companies Act, by the central government under section 128 subsection 5, then in that case this period of 8 years can be extended. So this is one exception to this. Now similar to this, section 131 is there, which gives the similar kind of power to board of director of the company who think that a financial statement or board's report are not in compliance with section 129 and 134 of the Companies Act. In that case, they may apply to tribunal to open the financial statement for recasting for any of the last 3 financial years, and upon court's order the recasting or reopening is allowed. However, they cannot open it for all the 3 years together. They can only open for the 1 year. Now coming to section 132, which talks about National Financial Reporting Authority. Here central government is empowered to form NAFRA. The main area of operation of NAFRA would be to make recommendation to central government with relation to accounting and auditing policies, monitor and enforce accounting standard and auditing standard, oversee the quality of service professionals. Further, the power of NAFRA are to investigate, either they can investigate suo moto or on a reference made to it by the central government for conduct of chartered accountant associated with prescribed class of body corporates. Further, NAFRA is given a power equivalent to civil court as per the CPC 1908, and any order of NAFRA is appealable to National Company Law Appellate Tribunal. So against the NAFRA, you can go only to the appellate tribunal. And now going further, section 133 is there, which talks about central government is empowered to notify accounting standard in consultation with NAFRA. Now coming to section 134, which talks about financial statement and board of directors report, including consolidated financial statements. Who needs to sign it? It can be signed by the chairman, director, MD, CEO, CFO, company secretary, or for one person company, it can be signed by only one director. The attachment to these statements will be report of board of director and auditor's report. Who needs to sign the board of directors report is the chairman or two directors of the company. One of them need to be managing director. Further, these financial statements, consolidated financial statements, needs to be published or distributed along with auditor's report, director's report, and any notes forming part of the financial statement. Going further, section 136 is there, which talks about right of member to receive the audited financial statements. It talks about members of the company, debenture trustee are entitled to receive financial statement, consolidated financial statement, auditor's report along with any annexure thereof at least 21 days before the date of the meeting. However, if they may agree for shorter duration of notice with 95% majority, they can get these reports with shorter notice period as well. Further, in case of a listed company, these financial statements needs to be published or hosted at the website of the company minimum 21 days before the date of the meeting in order to ensure compliance with section 136. Now moving on to the last section, which is 137, which talks about filing of the financial statement with the registrar of companies. Financial statement needs to be filed with ROC within 30 days from the date of the AGM. However, if the financial statements are not adopted at the AGM, they need to be filed within 30 days. In that case, ROC will take the financial statement on provisional basis. Further, financial statement at adjourned meeting needs to be filed within 30 days of the adjourned meeting. However, if no AGM is held, in that case, financial statements need to be filed within 30 days from the date on which AGM should have been held, along with the reason why the AGM could not be held. In case of a one-person company, the financial statement needs to be filed within 180 days from the end of the financial year. So friends, this was all about books of accounts, books and records and financial statement with respect to Companies Act 2013. I hope you would have found it useful in your professional endeavors. This is CA Hemant Gupta signing off. Thank you for watching this video.